Good evening, money magnets. So great to see everybody. This is your Uncle Charters. We're looking at a 30-minute chart of the SPY, and as you guys can see, from the 9:30 candle from here until the end of the day today, not much happened. So pretty disappointing when you're trying to trade, you're looking for trading opportunities, and the market, specifically the SPY, didn't even provide you an opportunity. It's one thing when you don't make money when a trade doesn't go your way, then it's another thing when you don't make money because the market didn't really do anything. But I do have some good news. The market has habits. It tends to have some habits. And one of the habits that I love to pay attention to is the contraction phase, which transitioned to the expansion phase. And lately, you can see an example here. July 23rd, we had an expansion move where SPY popped to the upside, going to new all-time highs. The next day, even though the close was a little bit higher, the intraday was pretty much a contraction day where it was low volatility, it was choppy, not much follow through, thus giving us this doji candle. And then the next day we had a pretty trend day when we had to new all-time highs, giving us a trend move to the upside, and it was pretty tradable from last Friday. And now once again we're getting one of these low volatile choppy candles. So based on the behavior of what we've been getting lately, the odds of tomorrow being a trend day or a more tradable day will be higher. Of course, it's not guaranteed, but the odds will be higher of us getting what we are looking for. So it's important that we look at today's candle, the range of today's candle, with the pivot high at 638. Now the low was around 635.5, which coincided with one of my Fibonacci levels at 635.57. But the main support level I'm watching more closely is the 636 level, because that was the high of this choppy candle from last Thursday, and we broke it out, and the breakout is still overall intact. So the way I'm approaching today's candle is pretty much the same as the approach I had for last Thursday's candle, where I'll be watching the range. So if SPY wants to go to new all-time highs, 638 must clear. It must take out today's pivot high, which there was definitely evidence of selling pressure. But if it can clear, get that 15-minute, 30-minute, even 1 hour candle close above it, that will be our sign that the sell order that was sitting here at 638 are gone. And if they're gone, there wouldn't be much stopping it from heading to new all-time highs. And I have the next Fibonacci extension level at 639.99, but we can round that to 640. If it is finally time for a pullback, and I tell you, we are due for a pullback, I just don't know when it's going to happen. But if it does decide to happen tomorrow, we want to see today's low get taken out. Now, while I am watching that 636 level still, 635.5 has more reasons to be watching it. Today's pivot low, and also it being a fib level. So if 635.5 fail, watch out for that 5 DMA. I do have the next fib level around 634, but that 5 DMA must be watched, because a lot of times when the market is still overall bullish, it tends to get a bit overextended and far away from the 5-day daily moving average. So what tends to happen is it pulls back or chops sideways until the moving average can catch up, and it tends to look like a bounce off that moving average, treating it like a support. You can see from July 22nd, we can see from July 23rd, many examples of this. We can see from July 2nd, remember when it was moving up strongly to the upside? It was also overextended on the Bollinger Bands, multiple days, 1, 2, 3 days, and then it just retraced or went sideways until the moving average was able to catch up, and then it continued going upwards. So once again, we need to watch that moving average. I know I'm very repetitive with that 5-day moving average, and I have said in the past that it's one of my favorite, but it's one of my favorites for a reason. It helps me gauge the market if we're still overall bullish or if it's pullback time. So if it's a true pullback time, I'm talking a multi-day move to the downside, that moving average must be one of the support levels that must fail. So 635.5, 634ish area, if they fail, that will be a good sign for the bears, and we could get a lot more downside incoming. But once again, we have to be prepared for either scenario, and that's the bear case scenario. And the bull case scenario is clearing 638 to continue this melt up to the upside. And I want to make it clear that right now, Uncle Charters is not really trusting any pullbacks, any micro pullbacks. I mean, like if we break down one support level, that's not enough for me. We need to see a big body red candle to the downside, a rug pull style, elongated big body red candle to the downside. We need to see fear. That's what we need to see. If not that, maybe an exhaustion gap to start getting people fearful, maybe. But right now, I'm not trusting any of the micro pullbacks because the dip buyers just continue on buying the dips. Triple Q, similar situation to the SPY right now. It did end up closing higher at a new all-time high, but the overall candle is a choppy one. Now we do have to watch that Fibonacci level I have at 568, a little bit above that in the aftermarket, and if Triple Q can maintain that, 570 is my next resistant level. It's a Fibonacci level, and if it can clear, I have a macro level Fibonacci level all the way up at 573.4. That would definitely be possible if Triple Q can stay above 568 and clear 570. But if we're gonna get a major pullback, multiple levels must break down. 568 being one, 566.5 being another one, and of course my 5 daily moving average, which is going to be around 565 for tomorrow. You can see lately, since we've been moving up to the upside, see how much the market respects that 5 daily moving average. It just stays above it, treats it like support. False breakdown setup has been very bullish off that moving average, so multiple levels must fail, but 565 being the very critical one, because that will put Triple Q below the moving average, which is really what the bears need to give us a bearish sign that we're headed into correction mode. Tesla, it managed some way somehow to recapture the 5 daily moving average as well as my triangle pattern. That's a false breakdown setup. I'm not sure what the catalyst is, but at the end of the day, we're just following the price action, and it recaptured 320.5. It recaptured 323, which were 2 levels I mentioned in my Discord today to watch, and we cleared all of them, hit the 330 level, came just shy of my 331.5 Fibonacci level. But even though it's bullish, it's not guaranteed that it's going to continue tomorrow because we are trading in a very trappy market. So if market makers want to set the bull trap, this would be a good setup, but they'll need to show follow through tomorrow. So if today is a trap, maybe just a regular gap fill, something like that, they will need to break down the 5 daily moving average once again, and it's around 322.3. it dropped down a little bit, but watch that level 322, and of course the fib level at 320.5. if those 2 levels fail tomorrow, then you know today was just a bull trap set by the market makers, and we're likely heading down a lot lower, possibly below 300 on the next leg down. But if this is not a bull trap, watch if it stays above the 5 daily moving average. If it does, that's a good sign for the bulls. Right here, right now, the next resistance is at 326, 328, 330, and 331.5. If those levels clear, that is your bullish follow through, and we're likely heading above 340 on the next move up. Here is NVDA continuing to be bullish. We had a decent body green candle. Decent, not the best, but decent body green candle from last Thursday. This was a gap up out of an inside candle setup, a bullish gap up, which was a bullish breakout. And it definitely showed follow through, but last Friday they had to chop a little bit, giving us this doji candle. So how do we trade doji candles? We watch for the break of the range, and it was around 174.7. So it could have been a reversal if it took out the low of that candle, but it didn't. I mentioned to my Discord we want to stay bullish above 174, and it worked out well. I had a 175.5 and 177 target, and we hit that 177 and stalled there. But if we clear 177 tomorrow, I have a macro level fib level at 178.5. that will definitely be possible to hit if we clear 177 tomorrow. I cannot trust any pullback unless support levels fail. While 175.5 is a support level, 174 is more important because we can see multiple times we tested that level as a resistant level and there was selling pressure, but today we cleared it. So that is a breakout. So if bears want a false breakout setup, that's the level they want to break down tomorrow. And of course, watch that 5 DMA, which is around 172.3-ish. Those 2 levels break down. It's a good sign that we're bearish on NVDA, at least for a pullback, a very nice one. Here is coin. Coin's in correction mode. Coin's in correction mode, and it's continuing to show selling pressure. This is pretty cool. Let me see if I can change the color of this. So I'm looking at the 100% one. I want to change it to yellow. It's important because 382 is where that level is. That was the last pivot high that I based my Fibonacci levels on that gave me these fib extension levels. This was the last pivot high. Higher highs, higher lows. Today, coin took out that higher high, and now it's back to being resistant. It took it out as a support. This was where the bulls needed to step up, and they did did not. But one breakdown is not enough. There must be follow through tomorrow. As of right now, it does look bearish, and if coin can stay below 382, then the bearishness continue. Today's breakdown stays intact, and we're likely heading back down to the 370s and maybe the mid 360s. But if we are to get a bounce, 382 must recapture to possibly go back test the 5 DMA. Because since losing the 5 DMA, this is when you know to turn bearish. You notice how Tuesday's July 22nd candle, we broke down the 5 daily moving average as a support. We closed below it. And then July 24th, we back tested that 5 daily moving average as a resistance, and it actually showed selling pressure. That is bearish price action behavior. Today, we retested that 5 daily moving average as a resistance. Once again, selling pressure. This is how we know the price action is turning bearish, when it starts showing selling pressure at the 5 daily moving average. So we can take this information and apply it to the SPY or the QQQ or even Tesla. That's how powerful that moving average is. And right now, based on the moving average and the context with the breakdown of 382, coin is definitely looking bearish. They'll need to recapture that 382 level as well as that moving average for me to switch back to being bullish. And last but certainly not least, here is IWM. Once again, rejecting from the 225 zone. There's definitely selling pressure in that area, closing back below the 5 daily moving average. We'll see if there is bearish fall through tomorrow. They must stay below the 5 daily moving average and break down 223 fib level. If that happens, I would look to short, and I would favor 225, 220, and more likely to test 218. I would favor that happening. I cannot switch from being bearish back to being bullish on IWM unless they can take out that sell zone at 225, and then I would favor us go testing 227 or higher once again. This is what Uncle has for you guys today. I know sometimes it can be a bit tough to trade this market when it doesn't even give us an opportunity, but always remember that you guys are a money magnet. You keep your mindset strong, and the market always goes from contraction phase to the expansion phase, from the expansion phase back to the contraction phase. It's the market cycles. Right now we're in a tough cycle, but this cycle will not last forever. I promise you that. And once we get back to the expansion phase, with all the knowledge that you possess, all the skills that you've acquired, you guys are gonna kill it, and you're gonna piss off a lot of market makers. And in my book, that is the money magnetic thing to do. I love y'all. Peace.